Bankole, we're seeing the share index there down for the 7th straight session. Is there any specific reason why money continues to flow out of equities? And perhaps you can give us a sense of where that money is going.
Yeah, thank you, Godfrey. We're beginning to see speculators who are taking position earlier on in the year probably get out of their positions and then take profit. We've not seen long-term positioning in the market since the 2009-2010 period. What we're experiencing now is we see speculators come in, buy stocks, expect results to come out, and then this is that period of the year where year-end financials for 2010 would come out. Some have come out already, and they were expecting a whole lot more from the banking sector. But as they release them, people who had bought stocks would, of course, take profits. Some would stay. So we've seen fluctuations in the last 2-3 weeks, but since last week, we've seen a gradual decline in prices. And then some investors will do short-term fixed income securities, as yields are very attractive at about level of about 8-9% of instruments that would mature in lesser than a year time. So most of the funds that are leaving the equity market would be invested in the Treasury Bills market.
But of course, when investors take profit, they are taking a particular view on the economy and on the market going forward. One of the questions I've put to other brokers as well as fund managers that I've been speaking to throughout the week here on Regional Roundup is whether the upcoming elections are part of the reason that we are now seeing some of money being taken off the table, and also whether we are, of course, seeing investors taking the lead, following the lead of international investors who have been quitting emerging markets because of the crisis in North Africa.
I wouldn't subscribe to that totally, because shortly, of course, a few weeks ago we saw Heineken coming to Nigeria to buy more than 4 breweries, that's to consolidate their presence in the brewery sector. And then we've seen other foreign investments, plus the fact that oil price going up caused by the problem in the north of Africa actually favors Nigeria economy-wise. We've seen an increase, in price that would favor Nigeria as a country, but there was also a marginal decline in reserves, of course, because CBN, of course, is defending the value of the Naira. There's been some pressure as we continue to import. Nigeria is an import-based economy. It just shows the level of activity that's going on this year. We've seen more of imports, and the CBN too also have been trying to meet demand. So basically, it's balancing the level of the currency from not being over-devaluated, sorry. I'll stop.
Yeah, so let's talk about where some of that money has been going onto the fixed income market, and what have you seen in terms of the results that have been coming out of the Treasury Bill auctions? Yes,
there was a marginal drop in yields on the T-bills auction, even though it was open market operation. What we've seen is that T-bills, that's the shorter end of the fixed income market, I've seen a lot of demand in the last 1-2 weeks, because if you benchmark the yields on Treasury bills to bonds of 1 or 2 3 years, the yields are very close, meaning that yields on T-bills are quite high and attractive, and we've seen people and other institutions apart from banks come to buy, especially from UBA. So the gradual decline in yields shows the level of demand we've seen, and we expect this to continue on the short run.
Yeah, so we're seeing those yields coming down, but at the same time, we're also seeing the Naira under pressure, even at a time when we've got elevated oil prices. Now, in terms of, let's just move slightly and talk about the Naira and its outlook. I mean, we have seen the central bank come out and say they are committed to keeping it around that level. But the pressure that we have been seeing has also resulted in the central bank not meeting market demand. What's your sense of what the central bank's thinking is around trying to keep the Naira around that 150 level?
Okay. This week, the CBN issued $500 million with a shortfall of about over $155 million. That's unmet demand. This demand, we expect it to be carried over to next week, where we expect CBN to issue more than they've issued this week, because last week they actually did about $750 million.
Yeah.
And then the demand was met last week, but this week it was unmet. And then the interbank market, that's the secondary market where USD Naira has been traded, has also reacted and taken a cue from what happened at the WDAS auction. What we've seen is a further devaluation of up to 1 Naira 30 kobo in the secondary market. Yeah. This might continue if the CBN does not meet demand next week. So we expect that the CBN would meet demand, increase the amount to be issued Monday, Wednesday next week.
But why have they been keeping the money short, given the market short, given the fact that we have now seen this translated into a weaker Naira?
Last week, as I said, they met demand and there was an excess in issue. Okay. Of course, they tried to be more tighter this week. But we expect that by next week, seeing what has happened this week, they would meet demand.